When I first started stock picking at the age of 11, my approach was quite simplistic and far from the most effective. At the time, my understanding of the stock market was rudimentary. I viewed stocks as fickle entities, moving randomly between highs and lows. I was interested in tracking these fluctuations and, naively, I believed that the key to successful investing was predicting these movements. I immersed myself in the study of technical analysis, which is the analysis of past stock prices and market patterns to predict future movements. Edwards and McGee's classic book, a seminal text in the field, was among my required readings. Technical analysis can be powerful, but my view was limited to the idea that investing success depended solely on deciphering charts and identifying price patterns. This approach was short-term oriented and focused solely on trying to predict the direction of stock movements. I didn't consider fundamental factors such as the financial health of companies, their growth prospects, or the impact of broader economic factors. In fact, my strategy was limited to trying to anticipate daily and weekly market movements, which often led me to make decisions based on momentary impulses rather than in-depth, strategic analysis. Over time, I have come to realize that the stock market is much more complex than simple price fluctuations. Successful investing requires a deeper understanding of the companies you are investing in, their long-term strategies, and how they position themselves relative to the market and the global economy. Technical analysis has its place, but a balanced approach that also considers fundamental analysis is essential to a sound and sustainable investment strategy. This early experience was a valuable starting point, but it also taught me the importance of broadening one's understanding of the stock market and investing practices. When I was around 19 or 20, reading Benjamin Graham was a turning point for me. His approach to investing made me realize that I was on the wrong path. The idea that predicting stock movements was essential was dispelled when I realized that the true essence of investing was buying companies, not just trading their shares on the market. From that moment on, my view of stocks changed profoundly. I stopped seeing them as simple financial assets subject to daily fluctuations and began to see them as shares in real companies, with their own operations, products, and strategies. This change in perspective changed not only my way of investing, but also my approach to the stock market. By focusing on the underlying value of companies, I stopped obsessing over short-term movements and constant day-to-day swings. Instead, I focused on understanding the financial health, competitive position, and growth prospects of the companies I invested in. This more holistic, long-term view helped me make more informed decisions that were aligned with the true nature of investing. This shift in perspective proved crucial to developing a more solid and informed investment strategy. Understanding that investing is actually about owning a piece of a business, rather than simply buying and selling shares based on market speculation, made all the difference in my financial journey. My investment philosophy is based on a strategic and disciplined approach, with a particular focus on American companies. Over time, I have developed the practice of allocating at least 80% of my portfolio to shares of American companies, considering them not only as tradable securities, but as investments in American companies with potential for growth and innovation. My approach is essentially long-term, meaning that my strategy is not guided by daily market fluctuations or short-term news. Instead, I focus on the intrinsic value of companies and their future growth prospects. I believe that investing in solid companies with strong financial fundamentals and a strong competitive position is the key to generating significant returns over time. When the market offers attractive stock prices, I see this as an opportunity, not a cause for concern. If stocks fall, this is usually a signal to me that I can acquire more shares for the same amount of investment. This type of situation is welcome, as it allows me to increase my holdings in promising companies at a reduced cost, taking advantage of market conditions in my favor. Looking at the long term, this strategy not only helps you build a solid and diversified portfolio, but also provides the opportunity to accumulate wealth as the companies you invest in grow and increase in value. In short, my investment philosophy is based on patience and careful analysis, focusing on companies that I believe are valuable and capable of delivering substantial growth and returns over time. Imagine a world without the stock market, a world where investors buy businesses with the same zeal they would a farm or an office building. In this context, the primary focus would not be on performance at a given point in time, but rather on the long-term return that these properties can provide. The idea is that the real value of an investment lies in its growth potential and ability to generate income over the years, not in daily or monthly price fluctuations. Observing the development of the United States economy, it is clear that there has been significant progress in the quality of life and in the creation of wealth. Historically, the evolution has been marked by notable improvements in access to more effective medicines, more advanced education, diversified entertainment, and more efficient transportation. Capitalism, combined with progressive governance, has contributed to an environment where productivity and wealth have increased considerably. Society has become more sophisticated, with an economic and social system that appears to be in a continuous cycle of improvement. This progress is not limited to the increase in material wealth. It also reflects an advance in the quality of goods and services available, in the capacity to innovate, and in the way in which people's needs and desires are met. The evolution of institutions and the ability to adapt to technological and social changes demonstrate a system that, despite challenges and uncertainties, has a trajectory of constant growth and improvement. The future looks promising, with the expectation that society will continue to develop and prosper, maintaining the trend of rising living standards and expanding opportunities. This view of the market and progress reflects a deep understanding of how the economic environment can influence our perception of value and success. When we consider investments outside of the stock market, the comparison with buying physical assets like farms or commercial buildings leads us to a more informed and long-term analysis. This type of investment is less susceptible to day-to-day fluctuations and more focused on the asset's ability to generate sustainable returns over time. Economic progress, as seen in the evolution of the United States, demonstrates that continued growth and improved living conditions are the result of a system that learns and adapts. Increased access to improved medicines has contributed to improved health and quality of life. More advanced education prepares a more skilled workforce, driving innovation and productivity. More diverse entertainment and more efficient transportation enrich the daily experience and promote greater mobility, both physical and social. Capitalism, with its dynamic market forces and incentives for innovation, has been a powerful engine of progress. However, this system does not operate in isolation. Governance and public policy play a crucial role in creating an environment where wealth can be accumulated and distributed more equitably. Reforms and adjustments to economic, social, and regulatory policies help shape a system that fosters continued growth and prosperity. Furthermore, society has become increasingly productive and wealthy, reflected not only in the quantity of goods and services produced, but also in the quality and innovation of these products. The ability of a system to adapt and evolve is a clear demonstration of its resilience and effectiveness. The future promises to continue this trajectory of improvement, with technological and social advances that can open up new opportunities and face challenges more effectively. The expectation is that society will continue to benefit from the lessons learned and the innovations developed, maintaining a trend of continuous growth and improvement. Thus, the vision of the market and progress is marked by an optimism based on history and evolutionary trends, suggesting that the best is yet to come.